Hello everyone, and welcome to this video. If you're watching this, it means you've taken the first step towards understanding the financial market, and that's a very big deal. This video series wasn't created to hype you up or sell a dream. It was made to give real and practical knowledge to beginners who are serious about trading but don't know where to start. You know how overwhelming it can be at the beginning, so I decided to break things down the simplest, most direct way possible. Now let me be clear, trading is not just about clicking buttons or staring at charts. It's not some shortcuts to quick riches. It's a mental game, a long-term journey, and a process that demands a complete shift in mindset. You'll need to think differently, manage emotions, stay disciplined, and learn to see the market like a strategist, not a gambler. If you don't build the right mindset, nothing else you learn will stick. That's the foundation of this journey. So I'll be dropping a new video every day for the remaining days of this week, covering essential concepts, real market insights, and lessons I've personally learned over time. Each one is meant to guide you step by step, brick by brick. So don't skip it any day. Take each video seriously, apply what you learn, and show up every day with the mindset. This is more than just content, it's a journey of growth. A journey will work together. So if you're truly ready to grow, transform, and become the kind of trader who understands the game, then let's get started. So without wasting much of our time, we're going straight into what we have for today. And we'll ask ourselves this question. For someone who is new into trading, for someone who is going into something new like this, you first of all ask yourself, why am I learning this? Why am I going to trading? And besides whatever you have in your mind, that is your reason for learning trading, I'll be like outlining some few things that basically are advantages of one who is about to go into trading. So number one, we have financial freedom. Trading gives you the potential to earn independently from anywhere in the world. You don't have a boss, you don't have someone you work, you don't have to go to work from 6 to 9. You work on your own at the comfort of your home, anywhere, just your laptop or your phone, and you earn from anywhere possibly in the world. And number two, skill-based income. Unlike gambling or luck-based income, trading rewards discipline, strategy, and consistency. It's a skill that you learn and it becomes something part of you. You can make use of it at any time, anywhere in the world to bring out money for yourself. And also, trading is a global opportunity. You're participating in a multi-trillion-dollar market. Forex alone moves over $6 trillion daily. That's for only Forex. It moves about $6 trillion daily. So it's a global opportunity. You can see that there are opportunities everywhere in the market for you to capitalize over. Then going down to personal growth. For those who have been into trading for some time, trading changes your mindset. It sharpens your patience, your psychology, your ability to make decisions, and emotional control. It changes almost every perspective about your life. Then you go down to low barrier to entry. With just a smartphone, interest, and proper knowledge, anyone can begin. You can begin with that. With just your phone, interest, and proper knowledge of the market, you can begin trading. Then leverage and flexibility. You can also start with a very small capital, grow it up, trade when you want, day or night, even part-time. So trading isn't just about money, it's about building the mindset to master anything in life. Before you start trading, you have your own specific reason. Money should be your long-term goal. So in that case, yeah, these are all good things you can achieve from trading. But if you really want to stay in the game, if you really want to hold on in this game, then you have to have that reason. You have to have that reason that even when you get tired, because for sure you take losses. There are times you will feel like maybe you are doing the wrong thing, but you have to have that reason that keeps you going. When you remember that anytime you have an issue, just remember that, yeah, this is why I got into this. This is the reason why. This is what made me to go into this in the first place. You should have a reason that is closest to your heart, not just the money. Money should be your long term. Yeah, if you learn it, money will come, but you should have a reason, a particular reason. What are you going to do with that money? What do you look to achieving after you get to this point? Money should be your long term goal. If you have your eyes all on the money, then I don't think trading will work for you, because that's when emotions start to set in. That's when you begin to over trade. You begin to see money more important than every other thing, and you try to get money. When the market takes from you, you try to take back, and at that point you won't be able to be successful as a trader. So next we're going to trading versus gambling. Many people try to mix up things when it comes to trading and gambling. They mistake, or let me say they mix up things, trying to say trading and gambling are the same thing. But no, you have to know the difference. Trading is a skill-based activity where decisions are made using data analysis, strategy, and proper risk management to generate profit over time, build income over time with minimal risk. Gambling, on the other hand, is a chance-based activity. You can't say there is a specific strategy to how you approach gambling. You go in based on luck. If luck falls on your side, you go trade. If it doesn't, and in gambling, there's what we call high risk, high reward. The more you put in, that's the more you can get. But coming to trading, you can start with as little capital as you want, compound it till you get to a particular point, just by acquiring that skill, knowing how to analyze, having a good strategy, and knowing how to properly manage your risk. So many beginner traders treat trading like gambling, actually. Chasing signals, revenge trading. That's like when you take a trade and it goes against you, you lose money, you try to trade back and get back the money you lost, which results in more losses. That's a type of gambling trading. Then over leveraging and loss of money. Most of these things we'll be looking at them in the subsequent days as we go on. Then real traders manage risk, wait for confirmations, and follow a plan. That's one of the most big things you can mention here in trading. Managing your risk, waiting for confirmation, that's being patient, and following a plan. That's just everything trading is about. Trading becomes gambling the moment you remove plan, patience, and discipline. Once you step away from your plan, you stop using your plan. Once you are not patient enough to wait for that confirmation to get into a trade, and once you are not disciplined enough to do what you said you are going to do, then you are treating trading as gambling. That's it. So now we'll be discussing what makes a successful trader. Okay, before you go into trading, someone will ask, okay, you see other people out there who are making money from trading a lot. I tend to ask yourself, okay, why is this person successful? What is this person doing that I'm not doing? Why is this person so successful in this? What does this person do that makes him so successful in this? Okay, I'll be outlining some of these things for you. Number one is consistent discipline. Normally, in every aspect of this kind of things, you listen to people talk about discipline. And if you have been around traders, most traders will emphasize discipline. Doing what you planned, even when the market tempts you, that's discipline. When the market can be very, very tempting. The market can be very, very tempting. Okay, how can it be tempting? Okay, well, let me discuss how can you be consistently disciplined. Number one is by following your trading plan strictly. Having it, you are already outlined that, okay, this is what I'm going to do today, this is what I'm going to do today, and follow it. If I reach this point, I'll stop. Maybe, for example, you are taking a trade, the morning you took trade, you got money. In the afternoon you took trade, you got money. But according to your plan, you're supposed to take just 2 trades for a day. Once you take 2 successful trades for a day, you're going to stop. But okay, you took 2, you got money, and then great, step it in. You now saw another opportunity. You say, no, let me capitalize on this one again. You have gone out of your trading plan. You took that one, and then all your profits for the day was wiped out in that one trade. You are not disciplined at all. Then number 2, you don't trade out of emotion or boredom. Okay, emotion now. For example, you take trade, you lose. You are trying to take another one to counter the one you lost, so you gain back your money. You are trading out of emotion, or you're under pressure. You feel like you are not patient enough. You want to, something is moving this direction. You see the market moving up, and then you are having that fear of missing out that move. You are beginning to trade out of emotion. You are not being patient. You do not see a particular reason why you are getting into that trade. You just see that, okay, the market is moving this direction, so you have to follow. And that's where you see people, they enter on a buy, market goes up, turns against them. Then you see them, they enter on a sell. Before you know, you are blowing your account. So you don't have to trade from emotion or boredom. Then understanding that consistency beats hype. You have to be consistent for you to be able to be a successful trader. It's not something you do today, you go away from it, and you expect to come back whenever you want. You have to be consistent if you want to grow, because it's something that works with step-by-step movement. You don't just wake up today and then make money overnight. It's something that takes time. You grow bit by bit by bit, and that's what I mentioned about compounding. That's if you have plans, if you are seeing the money as a long-term achievement, that's when you begin to consider things like compounding your account. You put in a little amount of money and you are growing it bit by bit by bit by bit. Maybe for a year you set a goal that is a particular amount of money you want to make for this year, and like that. That's what boosts your consistency. Then number 2, we're going to management of risk. Management of risk. You are not in this to win trades. You need to stay. This is one of the most important parts. If you are not able to manage your risk, there's no way you are going to succeed in trading. There's no way. Okay, risk is a certain percentage of your account you can afford to lose. That's when you're entering a trade. You don't control the market. You cannot say, okay, the market is moving here and you expect to win all the time. Yeah, your strategy might work, let me say 50% or 60% of the time. Meanwhile, it will fail. No matter who you are, no matter the kind of trader you are, there are times that you fail. But the rate at which you manage your risk determines how successful you are in trading. Use stop loss and always calculate your risk to reward before executing. You don't just enter trades. You set stop loss. If you don't set stop loss, the market might just shock you. You go out now, come back in a few seconds, and your account is already blown. So you have to set stop loss. You have to calculate what. Yeah, you have to have that knowledge that yes, this is the amount I'm risking and I'm ready to lose this amount, so that even if the market goes wrongly, you know that this is the amount that I've lost, or this is the amount I'm going to lose. You understand? It reduces emotional trading. So focus on protecting capital before chasing profit. That your capital that you have put inside, the goal there is to move gradually from that point. The moment you begin to see money first, you want to capitalize on the big move and make plenty money at once. That's where the problem comes in. Focus on protecting the capital. Just know that trading is a step-by-step process. So management of risk is very, very important. Number 3, strong trading psychology. Emotional control under pressure. Psychology is very, very important. These 3 things: discipline, risk management, psychology, they are very, very important. If you're able to manage your psychology, it's like controlling your own mind. You know, the mind sometimes messes around with us. You have to be able to control your emotions even when you're under pressure. You have to be able to control fear, control greed. There are some people, okay, control fear in the sense that there are some people that they see the nice setup, they see the best setup to enter, but they are still scared of entering because they are afraid of failing or losing money. Then greed, there are some people that will get money like twice. They have already reached the amount of money they planned for a day, but greed won't let them. They still see another opportunity and they still want to jump in and still continue. It results in failure. Those kind of people, they end up losing one trade and it clears everything they have made for the whole day. So accept losses as part of the journey. Like I said, it's normal for everybody who trades. Even the best traders in this world, they take losses. So accept it as part of the journey. The only thing that distinguishes a successful trader from an unsuccessful one is how they manage risk. The rate at which they gain is always higher than the rate at which they lose. So you have to accept losses. That's very, very important. Then don't chase the market or revenge trade. Let the market come to you. Don't chase the market. Don't revenge trade because you lost money. Yeah, and that's sitting. You let emotions step in, and then you want to take another trade